Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 7th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Alright, so in previous videos, I had mentioned that I kind of was hoping that the price would get into this 135.79 or even 139.98 levels before I can actually short the market or the SPY for that matter. Instead, today we gapped up almost into this level up here, which came pretty close, but then didn't quite make it there. I've been noticing that about that in a lot of stocks actually lately. I mean, hardly any of the stocks are actually meeting the support and resistance lines like they normally do. And normally, when that happens, it's normally in the options expirations week. For example, next week I would expect this kind of behavior in the stock market, but this week, be prior to next week, which is options expiration, I don't expect stocks to not hit their levels, but that's actually what's happening. So right now, this week, it seems really similar to what is supposed to happen next week. Options expiration week, in case none of you know about that, there's a lot of manipulation and game playing because that's options expirations. I mean, most people who write these options aren't retail traders like you and I mean, they're institutions that are writing these contracts and selling it to you, and they need to make the most money they possibly can, so they're going to manipulate the market, do short squeezes and whatnot, just so they can benefit themselves and make the most money that they possibly can. There's also another anomaly called stock pinning. If you've never heard of that, a lot of times you can predict where the price is going to end next week Friday simply by pinning the stock price of where the probabilities are that most institutions will make the most money and or lose the less money. Okay. But obviously, I won't get into that. That's more of the van side to options expiration and whatnot. Just keep in mind that next week it's very volatile because it's the week of options expiration. For today, however, Uncle Ben did not mention anything about QE3, and that's kind of expected, being that the Operation Twist is still going on to the end of this month. So he's got to keep his ammo, and once Operation Twist is over and then the market continues downward, then he can mention QE3, and then we'll get an inflationary rally after that. So for now, let's just look at what happened today, and then try to determine what might happen for tomorrow. Now, here's the thing. I mean, we did have this gap up, and then we kind of faded down. A lot of people are shorting the market, and that's fine. If you caught this top here and you shorted the market, then that's fine. To me, right now, I'm staying out of the market because that'd be chasing. If you continue down, there is a possibility, because we have this 135.79 and 139.98 level, that we may consolidate and then actually break through up into this 135.79 level. That's definitely a possibility, but right now, not a probability. Okay, what we need to wait for is the correct pattern. Okay, and then once we get that correct pattern, then we can determine if we might get a jump to the upside or not. Okay. So for right now, I have a couple of stocks that look interesting to me. I'll get to that later on in this video. I keep getting tongue twisted tonight, but in any case, this is the SPY. A lot of times I like to keep my eye on the dollar because, like the VIX, it's dollar up, market down, dollar down, market up. And in the last night's video, just a brief history. If you're just watching this video, we had this pretty strong resistance point here that we bounced off of, and then now we have this pretty strong support line here that used to be resistance on this 20 moving average. And I said in the previous video, we're either going to go sideways and the 20 moving average is going to go up into it, or we're going to come down into the 20 moving average and into the support line here, which is what the case is looking like to be. Do not mind this candle here. I believe this is after the after hour trading. However, in the after hours, we're up 52 cents or 53 cents. We are bouncing off this 20 moving average, which should mean that the E-mini futures should be currently trading downward. Okay. Do I think that the dollar could continue higher? Yes, definitely. I think that the dollar could continue higher. Again, just keep in mind that next week is options expiration, so there's going to be a lot of volatility. Will this hold? That's really the question. I mean, what if we actually consolidate first before coming right down? Now, if tomorrow we go up higher on the dollar, then the markets would come down, and that would make sense because a lot of people don't like to hold over the weekend, especially with the Europe situation. So the dollar could come higher. We will probably tag this for a bounce on the intraday. However, we still have this level here, which is 85.23. Okay, I've been talking about this level for the past, I don't know, since I started making these videos. So we just need to be aware that the dollar could make it all the way up to 85.23. We've already consolidated. There is a possibility that we may bounce either here or break through and get to this 85.23. If we bounce, I do expect a sideways consolidation pattern, and then eventually getting up to the 85.23 level. Okay. This is the chart of the VIX. This is the fear indicator, or the fear index. I did a mathematical calculation on the VIX tonight. This is $19.49. You can tell when I made these mathematical equations because you'll be able to see that the line will end up where on the day that I actually make the mathematical calculation. So this is just for your future preferences here. So I made this calculation today, which is this candle here. I do have a level here at 1949. This does coincide with this gap fill level here and this pivot point right here. Okay, so there's a possibility that the VIX could come down all the way to this 1949. Plus we have this this 50 moving average here. However, it does look like the VIX is already pulling back or bouncing up. Now, again, just like the VIX and the other stocks, I mean, it really seems like this week is options expiration, simply because stocks aren't hitting their levels like they normally do. Okay, so we're in this rising channel here in the VIX. We've broken down, but we've made a recovery and we've retagged the top of the VIX channel here, and then we pulled back in a little bit. So a lot of times when you break down from a rising channel, let's just say this wasn't a channel. If you don't believe in channels, it really doesn't matter. What matters is that there's this trend line here. A lot of times after you break down, you would expect a back test before heading back down. Now the back test is expected, but sometimes it only goes up 50% before coming back down. So normally when we get a back test at about 50%, if I feel risky, my stop would be any close above this upper trend line here. Or if you don't want to take the chance, you let it tag this trend line here before you short it, and then your stop out would be right there, and that way your stop is very minimum and you don't have to worry about big losses. Okay, but just keep in mind, I mean, we may already bounce, and we actually may bounce back into this channel here. Okay, so that's actually a possibility. I've seen this happen already. When we take a look at the E-mini futures, you'll know what I'm talking about. It's going to be the inverse of what you're seeing now. If we do bounce back into this channel here, then this channel is still in play. We did not get a confirmation candle from down here, which means that this is more of a fake out than anything else. Okay. Now for the E-mini futures, this is the daily chart. As you can see, we had this I guess descending wedge here. We did get a breakout here, but again, like I said in the previous videos, we are going to need a confirmation candle. We did not get that confirmation candle, and now we're just right back into this wedge again. Okay, so we have this 200 moving average here that may give some intraday support, but ultimately I did a calculation. Right now it's at 1201.90. Okay, 1201.90. Now we're gonna probably come and get bounces before we get to this 1201.90, but right now this is the calculation is saying that we could possibly get all the way down here. So this is a very would say in a very strong downtrend as of now. So we are definitely in a bearish market as of now. So shorting the tops, or shorting the bounces, or selling the bounces, I should say, is the safer thing to do. However, if you want to catch the bounce for a counter trend trade, again, you just want to get in and out as fast as possible. So this is your 7-minute market update, and now let's get into some stocks. Alright, so this is the chart of the ABX daily chart. What I did was some calculations here. Let me get rid of this Fibonacci retracement, and I have a level here at 36.90 for a bounce. Okay, it's also at the 7.5 retrace of these Fibonacci retracement. There is a possibility we can get down all the way to 34.64 for a double bottom, but it looks like to me that we may actually get a bounce on ABX, which is gold mining. We've already broken down from this rising wedge, and the way I like to get price from rising wedges is to get the top and the bottom of the wedge, and then move it to where the breakout point is, and just so happens it also lines up with this level as well. So to me, in my opinion, this level is pretty strong. We also have somewhat of a pivot point here and a consolidation period that gives it a little bit more strength. So this is going to be one of my targets here. So I may take a long position. Any close below, however, this that calculated level is my stop out. Okay. Another chart that I'm looking at that I actually kind of like, I got to do more research. However, this was one of the stocks that, most of the stocks that I look at, the auto patterns are the same. You have a gap up and then it dropped down. This was one of the stocks in my watch list that never did that. It just continued higher. So we're up $1.49 on this stock here. I don't know if there's any options for here. I gotta look at it, but I did do a calculation of 39.37 right here. Okay, so this is the level that I'm looking at here. It's also gonna be at a fairly strong double top here. There is no moving average. I would like to have seen the 200 moving average here. That would have been the ultimate play. But again, we're in a bearish market. If we can get past 39.37, meaning if we close anywhere above 39.37, I stop out, no problem. The next level I have mathematically calculated is 42.02. I doubt it gets there. We are not oversold in my opinion. So this guy could actually go all the way up into the 200 moving average with no problem with this kind of strength. Okay, so the market was feeling a little bit weak, but this guy had a lot of strength. In fact, I'm just looking at this now. I have this pivot point here that coincides with this 200 moving average. So actually this might be a better place to take this trade. If this 39.37 level here might be a good day trade position. Okay, so that's for EXC. You guys are probably wondering what happened to Facebook today, because I took the trade and I told you I was gonna get I had a break-even stop on Facebook. So Facebook, I sold Facebook right here when there was this fake breakout. Okay, so as soon as it broke out of this level here, I kind of saw that there might be a possibility that this might be a fake breakout. And the simple reason is because this line could be drawn like that. Okay, so after it came down and we broke down from over here, it came to the conclusion that it was a pretty good idea to dump it at this level, at this top here. Facebook was in relative weakness while the markets were rallying earlier today. Facebook was just depleting, so Facebook ended up down here in negative territory. So that turned out to be a good trade. Made some, I didn't make the 40% that I was in yesterday, but I was about 38%, so it's pretty close. Okay, this is a chart of USO. This is a 10-minute. Now let me switch to the daily here. As you can see on the USO, it just tanked. Okay, so like I said, you just gotta follow your levels. This was gap fill. I sold it yesterday, so it turned out to be a pretty good idea, and it actually sold right into this 3160 level, which is pretty interesting. The next step down is this 2379. We may actually get a bounce off of the USO. It's such a big move. Yes, this is an engulfing candle, but you notice there's no volume behind it. Okay, so we may actually get a 50% retracement on USO before continuing down into this trend line here. Okay, so that's USO. Another chart I like, but is very high risk in my opinion, is this ORCL chart. Okay, so it has this pattern here. This is a reversal pattern. Okay, and it's on, I wouldn't say good volume, but it's definitely higher volume. Okay, as you can see, it's higher ever since this day here. Okay, so I wouldn't say it's exceptionally high. We are not in an overbought situation, and that's a warning that I want to give you guys. We're not in an overbought situation right now. We could definitely rally tomorrow. Right now, tomorrow, what the charts are telling me is that we'll continue down, but I just want to mention that we could probably have a chance of rallying tomorrow simply because volume doesn't confirm the move today. Okay, I just want to let you guys know that right now, that the charts are saying that we have continued downside tomorrow. However, this market could easily be propped back up by federal manipulation, etc., and whatnot. So you just want to keep in mind that if you weren't short from earlier today when the markets first opened at the gap up, then I wouldn't be chasing to the downside. I would wait for a pattern before jumping in on the downside. You just gotta watch out. Right now we're down. As an example, for this chart, because this is a reversal pattern and we are on volume here, there is a possibility we can get to this 25.56 level here. However, again, this is going to be a high risk play. Let's go back to the SPY real quick. Okay, so this is the chart of the SPY. I just want to warn you that even though we came down here, you don't want to chase already. Okay, so take a step back. Let's just say it comes down again tomorrow. That's fine. Let's just say we start consolidating. Okay, once we consolidate, then you know that this downward move is valid for the next move down. Now, keep in mind, you don't want to take the risk. The risk is even higher because next week is options expiration. So, when you have that type of volatility, you're just not gonna, you're not sure what's gonna happen. Taking plays on the swing trade is a lot more risky because it's a lot more volatile. However, day trades or intraday trading is a lot more fun when markets are volatile. Levels aren't exactly met, but if you can get a level to meet, then you can make a lot of money on the intraday. So for the swing trade, you just want to watch out. Levels aren't going to be met, and Friday will be the day to determine what's going to happen. I mean, I wouldn't be surprised if we get another down day tomorrow. But at the same time, I wouldn't be surprised that Uncle Ben comes out and says, we're going to depreciate the dollar again, and then we'll definitely rally up into the level here. And that's why I need to be diligent and disciplined and not take a trade until it hits a level. And that's simply because you can keep yourself out of trouble by waiting and not chasing. Okay, you wait for the proper pattern to come out first, and then you take the trade. I mean, if the move has already been made, then you have to wait for a pattern to expose itself before you go in. Before you continue in that direction, that way you can validate that that direction is actually, the the odds are going to be in your favor. Okay. Okay. Now I want to get into the questions and answers here. I got a I guess it's not really a question. It's um, more of a statement from somebody who just put on their speculation. Yes, all of my technical analysis is based on speculation. Everything is based on speculation of mathematical equations and whatnot. They're all based off of speculation. So, we have to speculate to determine where the markets are going to go. And hopefully, when we meet these levels and if the markets play nice, to be honest, the speculation comes from a technical reason, and and that's why it's called technical analysis. Just real quick, I mean, just like this SPY, or let me look at something. Let me look for something pretty simple here. Okay, so I found a chart. This is Las Vegas Sands, and I apologize if I'm not too sure what your question is, or if that's just a statement of speculation. But I just want to explain to you, how technical analysis works, and it's not magic or anything like that. It is speculative, obviously, but there is a technical reason behind it. For example, let's take a quick look at this double top here. All right. So if you kind of look at the, when I always say in the beginning of the movie that we use technical analysis to predict a direction based on human emotion. I mean, if you think about it, when somebody buys, LVS or Las Vegas Sands, all the way on the top over here, whether or not CNBC or somebody from Goldman Sachs or whatever says to buy, and normally when the news people come out to say buy, that means that the market's gonna go sell, and it's simply because that these big institutions that buy millions of shares of this need to dump it off to somebody, and the retail traders are the ones that they want to make money too. So if they announce it on the news and millions of people are watching CNBC, they're gonna all jump into Las Vegas Sands and buy. Sooner or later, you're gonna get this huge gap down here. Obviously, this was from earnings, but imagine that you bought Las Vegas Sands all the way up here for months and months and months. You're just hurting and hurting. You're watching your capital just deplete because most people, they spend most of their capital in one single trade, hoping for that jackpot money, right? So it comes down, and they're losing, and then now you have all these human emotions into play. As the price comes down, they're praying maybe, and then they're saying, I hope this thing goes back up, and that's one of the three emotions, which is hope, greed, and fear, right? And then so as it comes back up, it's saying, please, just let me break even, this and that, and if you let me break even, then I'll get out of the market and I won't trade anymore, this and that, and it kind of teases them a little bit. It's just not there, and then they comes back down, and they're like, oh, come on, just let it, just let me get break even, and it comes up to here, and it's almost there, but still, this is actually another nice double top up here too, and then and then it comes crashing down over here, and then you're like, oh no, the wife is getting mad at him, or the husband's getting mad at her, or the wife, or whatever. Their life savings is going down the drain. I mean, imagine saving $50,000 of your hard-earned blood and sweat money, and just to be seen it taken away from those cruel institutions out there, right? And then finally it comes up and up and up and up, and then you're saying, "Oh man, just let it get break even, get me to break even, and I'll get out, you know, clean." Boom, right there. You have a sell off because nobody wants to be in the market anymore, or in the stock, because all the people that held up here from earnings time was suffering this whole time and just wanted to get out break even, and that's why you get a pullback. You don't always get a major pullback like this. Sometimes it's a very small one before it actually goes higher, but normally that's why technical analysis works. I mean, obviously head and shoulders, cup and handle, and all that, it's a lot more advanced of human emotion and why those patterns work, but there are reasons why patterns work. Okay. I have a statement here that says, "Thanks again for your help. I think I'm going to hold it now, and that there's no Takakyo E3. I'm hoping it shoots up to 26 by next week, so I can make my losses back. Do you see that happening?" Okay, let's take a quick look. And yes, you're welcome. I hope this analysis, helps you out as much as it does me. I really appreciate you coming to watch my videos. But I'll be sending you a message on, where a good start would be to learn technical analysis, and there are actually professional trainers out there that I can guide you to that are actually free, and free in regard to that they have a free 7-day trial. I'm not affiliated with them at all, not even for a second, but they're very good, they're very professional, and I've tried them out, and they work, they know what they're doing, and they are literally professionals, and they make calls that are just unbelievable sometimes. In any case, let's get started. Do I think it shoots up to 26 by next week? Let's take a look. All right, let's look at this chart here. What happened today? Okay, so just keep in mind that we didn't get to this 1516 level here, but we did get into some support here. It does make sense. If we have a gap window here, we do have this pivot. So yeah, we could definitely bounce up. $26. I don't know. That's a long shot. I mean, anything is possible. Let me get a mathematical calculation in here and then see what I can find. Okay, so I did some mathematical calculations. The first resistance I have mathematically calculated is $19.86 here. This is, oh, sorry about that. This is your first resistance point here. Now, keep in mind this is mathematically calculated, so what I would do is, just be aware that there is some resistance here already because it's the gap window. Then your next one is going to be 2237. From what I can see, manually drawn here is going to be at about 2417, and then 2522, and then 2753. So that means from now through the end of next week, if your options expire in June, I mean that's how much you have to go through to get to that 26 level. So do I think it will? Right now, it doesn't look like it, but anything can happen. Definitely anything can happen. You put fear in this market, and this sucker will shoot up like a rocket, right? So it's any man's guess at this point. However, you are into some support here, okay? We still do have this 1516 level that you have to take into consideration, and ultimately here, which is double bottom. Okay, so right now you're kind of like right in the middle, right? 50-50%, 50-50. If 50-50 you could shoot up, or 50-50 you could shoot down. I mean, keep in mind that anything can happen tomorrow. Tomorrow is going to be, normally Fridays have been a sell-off day because nobody wants to hold over the weekend because of fear. So yeah, you could get another pop. 1799 is something that you got to get through, and then 1986 after that will be your first pretty good resistance point. If you can get through there though, your next stop is definitely going to be 2237 or around this area here. You may have to actually get some support there, but you're into a lot of support right around this area here, so just keep that in mind. I hope this helps you, but you know what, that's all the time we have for today. Thank you for watching. God bless you all. Good luck to your trading, and I hope to see you in the